Let's do that. Let's do this. And we are ready to roll. Let's get ready to roll. Is that right? That's a no. Alrighty then. Look who's here on a Friday night. Sky, Karina, Adrian, New York Dave, Pedro, ¿qué pasa, Pedro? ¿Cómo está? Dave Silva. Bag of Fries. Bag of Fries is here. Chris Donnelly, Adam Shrepfarn. Shrepfarm? Okay. Travis, Adrian, how all y'all do? All y'all. What's with the Facebook camera? That's crappy. What a crappy camera setup that is. I mean, it's so dark you can't even see it. All right, it is what it is. Let's get ready. See what we're looking at. Oh, yeah, now you can see it. Alrighty. Chris Donnelly, Josh Stockwell, Elahim Selassie. Hello, happy Friday. Mike from Houston. Mikey, what's happening? Fletcher Munson, RM. Meg, good evening, Miss Megan. How are you today? Delighted to be in your presence. Darlene's here. Darlene, Dwight, Kimmel. Okay, top chat. What are we missing over there? Kirk, Danny Payne, Butch Jones from Alabama. Alabama Slammer, Butchie over there. Ruben Torres, Chris Donnelly, Daily Truth Update. Cool beans. Chris Donnelly, thank you for that. Thank you for that, sir. Let's get ready to roll. It is Friday. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Dennis Mancini, how are you doing? Brought to you by the 10-Minute Trader. Basically, it should take you less than 10 minutes to manage your funds on a daily basis. That's less than an hour a week. An hour a week for you to gain 1% per week, that would be over 50% per year. Depending, of course, how much do you have in your account? Is it going to be worth your while? It's going to be a yes. It's going to be a no. Thank you there, Dennis. Cool beans. Let's get ready to roll. So, does anybody have anything they want to take a look at? Or should I just jump right into the stocks that I have on my list? Favamines is here. Animals and Adventure. Cool beans. Willie Jack. Okay, B's here. Mike's here. AMD. Ooh. And McDonald's. People are interested in that McDonald's ever since that E. coli thing. How long do you sit on your stocks? I would prefer only a week or two. Every once in a while, you have one that lingers longer than I'd like it to. Hey, thanks for the videos. I watched them. They had a lot of info. Well, alrighty then. Did you see them all? There's over 300 of them. You probably haven't watched them all. Because basically, they all say the exact same things over and over and over again. Well, repetition. Alrighty. First one, we're going to take a look at Mickey D's. Why do we want to take a look at MCD? Why? They got a big issue. MCD. Mickey D's. There we go. So, Mickey D's has been in the spotlight lately because of some E. coli going on. How do you decide what will jump in the next 2 weeks? Oh, Jacob, that's an easy one. Not all. I watch some of them. Yeah, nobody watches all of them. That's crazy talk. Okay, Jacob, how do I decide what I'm going to jump into the next 2 weeks? We're going to touch on that as soon as we finish up with McDonald's. We're going to record McDonald's. Why not? We're going to take a look at McDonald's MCD. Let's take a look. There's the high a couple of weeks ago, the low a couple of months ago, last year, this year. Look at the movement. Up, down, up. Look at the big drop. What caused that big drop? Well, there's a news story about some E. coli stuff. Whatever. But before we even do that, let's take a look at where it is currently. Currently at 292.61. So if I'm going to buy it and do a covered call, my favorite strategy, because it is the simplest, easiest, and secure. Okay, 292.61. The closest one's going to be the 292.50, and that's going for 570. That is close to 2%. Now, I like to get a 1% consistently every week. 1% a week is over 50% a year. What do you think 2% is? 2% is over 100% per year. So if you can get 2% a week, cool. Now, this is a very low priority type trading. What does that mean? Very low. I mean, like you don't have to do very much to it. Once you figure out what companies you like, and finding out what companies you like is easy. Okay, always pick the best of the best, the cream of the crop. Well, there's 7,000. Wait a minute. 9,742. Now we looked the other day. 9,742 different companies you can choose from any single day. So how do you figure out which ones? Well, for me, it's easy. I like companies that are consistently profitable, which means they increase their dividends to their shareholders consistently for more than 2 decades. You thought I was going to say 2 years, didn't you? Or 2 months. No. 2 decades. 20 years. 800 credit. Cool beans. Interesting name. All right, so we're looking at companies that pay a dividend. Now, a dividend is a portion of the profit that goes back to the shareholders. Half the companies in the stock market pay dividends. The other half do not. So as we get started, I'm going to tell you right here, right now, if you're looking for capital appreciation, if you're looking for your account to grow really fast, yeah, you're in the wrong place. Okay, this is for cash flow. Okay, 1% a week, that comes to 50% a year. Now, if you want to use this strategy to grow your account 50% a year, well, you can double your money about 16 to 18 months. Who else does that? 16 to 18 months to double your money simply, safely, predictably, consistently, and number 5, you gotta like number 5, no way to lose. Well, where did I come up with the strategy? Well, in 2008, my daughter, when she was 9, jumped up on my lap and said, "Daddy, please teach me what you're doing." All right. Maybe not those exact words, but you get the point. At 9 years old, she wanted to learn how to trade. She wanted to hang out with dad and do certain things. But anyway, to teach a 9-year-old how to trade, it has to be simple, safe, predictable, consistent, no way for her to lose. Because if she loses, she's going to cry. I'm going to feel like shit. Mama's going to get involved. I'm going to be on the couch. Okay? No, that's just not a happy thing. So here's the 5 rules I came up with. Rule number 1, never buy something you don't understand. If you don't understand it, you don't want to own it long term, don't buy it. It's that simple. If you don't know what the company does, if you never heard of them before, if you don't want to hold, if you buy it and it drops down to nothing, you say, I don't care, I wanted to buy it anyway. Because they are going to go down and they are going to go up. That's all they do. Look, they go up, they go down, they go up, they go down. That's all they do. Okay, rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Rule number 3, make sure it's consistently profitable. Okay, I like 20 years of increased profits. Rule number 4, weekly options. I want weekly cash flow. That's important to me. Rule number 5, make sure the numbers work. What are the numbers? Well, what am I buying it for? What am I selling it for? What premium am I collecting? And is that over 1%? Okay, if all the numbers work, great. Now I want to look at the chart. Is the chart telling me today is the right time to buy? Well, we all know that McDonald's had a big issue a while ago. Stock made a big drop. Well, great. Well, let's take a look. Now, a year ago, McDonald's at $257.86. The bottom of the year was in the first week of July. Okay, and it was 243.53 right here. 243.53 the first week of July. But from there, look at the movement. Okay, it goes up, down, up, down, up, down, up, down, up, down, up, down, up, down. Then a big gap down here. Okay, now we know what this is from. Let's take a closer look at it. Antonio, how are you today? All right, Antonio, let's take a look at this. We want to take a look at the last 30 days. Now, there's a reason why I want to take a look at the last 30 days. Is because the last 30 days will give me a good idea of where it's going to be next Friday. Well, that's only 5 days away. Monday, Tuesday, Wednesday, Thursday, Friday. 7 days away, but we don't count the weekends because there's no trading on the weekends. So 5 days away, look what happened. 30 days ago, we were at 300. Okay, she went up, pulled back, up, pulled back, up, pulled back, up, pulled back. Now, on Wednesday, she gapped down. She went from 314 all the way down to almost 291. Well, that's a big drop. Okay. Yesterday, she had a little bit of upturn. Well, today she drops again. Why? That news is a little fickle. Okay. They don't want to let it go. They get a story like this, they sink their teeth into it and they don't want to let it go. Fine. Well, let's keep our eye on McDonald's because today is higher than the 30-day bottom. The 30-day bottom was 2 days ago. Okay, 1 day up, 2 days up. Not quite as up as I would like it to today. I would like it to be closer to the 300 mark before I jump in. So I like 2 days to the upside. Now, looking at seasonality is going to give us an idea of what it normally does. But when you get bad news, it's hard to shake bad news. So normally, Mickey D's just goes sideways for the, well, it's a tiny bit of an uptrend. Look at it. I'm talking tiny bit of an uptrend towards the end of the year. Fine. It's perfect for covered calls. It's perfect for credit spreads. It's perfect for debit spreads. Well, what are we looking to do? We're looking to jump in, grab 1% and get the hell out. Well, I buy it at the current price, $292.71. I sell the $292.50s and I get $5.70 per share. So what does that mean? Okay, so let's actually take the calculator and let's throw a practice trade up. See what it looks like, just for the fun of it. Okay, so we're going to change this to a covered call. All right, and then we're going to do the 292.50, which are right here. All right, so we're going to do just 100 shares, and you're going to see exactly what does it cost to buy 100 shares of McDonald's and to do one covered call. Ouch, that hurts. But anyway, buy one covered call McDonald's. 1 November 24. Well, that's the expiration. Okay, so if I'm buying it at the current price, I'm going to sell a covered call. Now, a covered call, if you don't understand what that is, that's giving somebody the right, not the obligation, to buy it from me, because I bought it. I'm buying it tomorrow. If I buy it first thing Monday morning, I sell a covered call. I'm selling somebody the right to buy it from me at a certain price, $292.50, by a certain date. 1st of November 2024. That's next Friday. So by the close of next Friday, if this stock is above the $292.50, well, I will get all my money back because they will buy me out, and I still get to keep $609 per contract. So each contract I do, I'm collecting $609. Well, what does that mean? How much do I have to dish out in order to get that $609? Well, clear this. $609 divided by the cost of the trade plus commissions, $28,641. $28,641, and that comes to a grand total of 2.12%. That's a 2% trade. It's McDonald's. Please tell me you've never heard of McDonald's. Everybody knows who McDonald's is. Okay? Now, if you like McDonald's and you like the trade, well, wait for it to go up one of the day and down a day or two. Okay? Wait for the bottom to isolate itself and for it to start to recuperate. Because we all know that this is going to blow over eventually. All right, so that being said, let's save that one. We're going to save that one, and we're going to record another one, because that's what we're doing here. All righty. All right, so that's McDonald's if you like it. It's a 2% trade. Well, 2.12%. Get out of that. Get out of that. Bring this back over to here. All right, what's next on the list? Okay, so Jacob Busby wants to know, why am I buying stocks 2 weeks? Why do you decide to jump into stocks the next 2 weeks? Or how do I decide to jump into stocks the next 2 weeks? Well, Jacob, it's relatively easy. I mean, it's so easy that it's actually silly that you asked the question. Seriously, wait till I show you, and you can say, oh, that's freaking silly, because it kind of is. All right. First of all, Jacob, the number one thing you want to do, very first thing, is decide what companies you like. Let me tell you how I figure out what companies I like. And then you can figure out how to change it, how to tweak it, how to adjust it to find the companies that you like. Okay, so I like companies, like I said earlier, that are consistently profitable. Well, how do you figure that out? Well, there's so many research facilities out there. There are people that actually keep track of who is consistently profitable and who isn't. Okay, so let me explain to you what a dividend is. A dividend is a portion of the company's profits that they turn around and give back to the investors. That's you and me. Well, you and me. Okay, so if once you buy a stock, you own a portion of the company. So like I said earlier, there's two companies. One will take all their profits and put it back into the company for future growth. The other will take all the profits, put some of it into the company, and then pass along a certain percentage of those profits to its investors. That's the ones that I want. Now, out of the 9,742 companies, there's only about 300 that have consistently increased their profits for 20 consecutive years or more. Okay? 20 consecutive years or more. Okay, you ready? Hope you got a pencil, piece of paper, crayon, marker, mascara, lipstick, whatever you use to write with. Poke your finger with a needle, use your blood. I don't know. I don't care. Anyway, list number one. Go to Google. This is simple. Go to Google. In the search, you want to put in Dividend Kings List 2024. Dividend Kings List. Sorry. Dividend Aristocrats List 2024. Dividend Champions List 2024. Dividend Contenders List 2024. Then, for the fun of it, let's throw in Warren Buffett's list because we like to peek over his shoulder and see what he's doing. Okay, so those 5 lists, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list will give you 300 companies or more, 300 or more companies that have consistently increased their dividends for 20 consecutive years or more. That's how I find my list. Then I cross-reference that list with the CBOE, Chicago Board of Options Exchange, to let me know which of those companies have weekly options, about 300. Okay? There's 54 companies that have increased Dividend Kings, 54. Okay? Dividend Aristocrats, 63. Dividend Champions, 150. Dividend Contenders, 300. Warren Buffett's list, I have no idea how much he owns. Anyway, so let's progressing. So Jacob, once you figure out what companies you like, I throw them into a calendar. Okay? Throw them into the calendar, and these little green dots you see are the EX dividend dates of each and every company that I like. Now, what's an EX date, you ask? That is the last day the stock trades before the dividend is paid out. Why is that important? Well, before the dividend is paid out, the stock has a tendency to increase in value or increase in price. The price goes up. So if you know when a price is going up on a stock, that's very valuable information. But what do you do with it? Just because you know a stock is going up, what do you do with that information? Well, one of the safest trading strategies there is the covered call. That's where you buy the stock, sell an option, a stock option for someone to buy it from you for the exact same price, get that 1% that I like. Now sometimes they go up higher than 1%. Sometimes they go 3, 4, 5, 10%. Okay, I'm not playing that game. I want quick, simple, easy, consistent, predictable. Okay? I don't want to second guess myself. I don't want to sit around. I don't want to sit in front of my computer. I want a simple, safe, predictable, consistent 1% per week. This is how I find it. Okay, so if I like Kinder Morgan, KMI, right here on the 31st, I will buy it 2 weeks before the dividend, which will be the 17th, on a Monday. Why on a Monday? Well, on a Monday, if 80% of all stock options expire worthless, I want to be a seller and be in the 80% group. I do not want to be a buyer and be in the 20% group. Nope, I want odds and probabilities in my favor. Okay, so if the odds and probabilities are in my favor with the stock options where I sell them, well, that's one. Two, if the dividend is coming up and I'm buying it 2 weeks before the dividend and the stock goes up in value before the dividend, well, that's two things in my favor. Okay, next, I want to take a look at the chart. Okay, what is the chart telling me? Well, it's really not that difficult to read. Okay, all the way over here to the far left is 52 weeks ago today, a whole year, 52 weeks ago. What do we got? But option buyers just sell them to someone else anyway. Okay, I get that. But I'm not an option buyer, I'm an option seller. If 80% of all options expire worthless, I do not want to buy them. So let's get back to where we were. Okay, all the way to the left is exactly a year ago. All the way to the right is today. So this is 1 year's worth of trading. And it's easy to see what it did. Okay, it went up, it went down, it went up, and then this mess happened. Okay, where she gapped down because of whatever the news is. All right, that being said, where do we think it's going next? Well, if she's coming down now, how far down is she going to come? Now, I only trade for 5 days. Now, why 2 weeks before? Well, because Mondays, why do I buy on Mondays? Because Mondays has the most time value between Monday morning and the time the options expire Friday afternoon. So at 3:59 p.m. Friday afternoon is the last moment you can make a trade with an option that expires on a weekly basis. Okay, see the dates? 25 October 24. How many days left? 0. It expired this afternoon. So if you didn't make any trades, if you didn't cash out, if you didn't take your profit before 4 o'clock bill this afternoon, all the options that have 25 October 24 expired this afternoon. So the next week out is 1 November 24. That's next Friday. Okay? I can only buy Monday, Tuesday, Wednesday, Thursday, Friday. So if the option expires on Friday and I buy on Monday, that gives me 5 days of time value. Okay, if I buy on a Tuesday, well, I only have 80% of that value. So let's say hypothetically the time value is worth $100. If I do it on a Monday, I get $100. If I do it on Tuesday, I get 80. If I do it on a Wednesday, I get 60. If I do it on a Thursday, I get 40. Okay, if I do it on a Friday, I get 20. Yeah, no, thank you. Okay, Monday is I get the highest value of time on a weekly option, Monday through Friday. Okay, that's why I go 2 weeks out, because if a dividend, okay, look at it, Lowe's, the 23rd, that was Wednesday. If I wanted to buy Lowe's and capture this dividend, right, I have to buy it 2 weeks out on a Monday, which would have been the 7th. Buy it on the 7th, wait 2 weeks, see if it moves. In the first week, do I get my 1%? Great. Do I do it again on the second week? Maybe, maybe not. 1%, 2%, 3% dividend. Okay, you're almost doubling or triple your rate of return just by implementing options. So if you're a dividend investor, you buy the stock to collect dividends, great, there's nothing wrong with that. Well, why don't I throw some options in there? That way you can double or triple your rate of return. Okay, most people don't get 40, 50, 60% returns every single year. But that's my goal. My goal is 1% per week. It's 50% per year. All righty. Dun, 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 dun. No one. Is this Forex? No. Marketing Life with Tina. Tina, how are you today? Ivan's here. How are you doing, Ivan? ONTO, onto. What the heck is ONTO? Now, if I have to say what the heck is something, it's usually going to be a no. ONTO. Imagine that. It's a no. Do I do futures too? No, I do not. And I did futures years ago. I don't do it anymore. I understand oil and gas. Alrighty then. That's great. Shannon, can we look at HOG you bought and the price dropped? Like to see where you plan on writing the call now. Oh, Shannon, alrighty then. Yes, you're absolutely right. Now, I share 3 accounts with you just to let you know. Account number 1, I sold the put. It went down. I had to buy it. Okay, fine, not a problem. Account number 2 and account number 3, I bought it at 36. I sold the 36 options. I collected 3% this week, 3% last week, 3% the week before. Do I really care what's happening this week? No, I don't. Steve, what do you think about a funded account as in prop firms? I heard a lot about them, Steve. Okay, I'm even contemplating doing one, but I don't really know the rules, regulations, the ins and outs, what I can do, what I can't do, all that kind of nice, neat, fun stuff. Okay, there are rules and regulations. There are hoops you got to jump through, and there are tests you have to do. Okay, I like my trading strategy. It works nice for me. If I could do my trading strategy in a prop firm, yeah, I would do it. But I don't, like I said, I don't know the rules and regulations to that. It's just something that's new to me. I haven't done it yet. Okay, so Shannon wants to take a look at Harley Davidson, HOG. So, like I said, I've already got 9% hourly out, but it's a great opportunity, and it sounds good. And they always say if it sounds too good to be true, it probably is. So think about it. The sales pitch that I got, all right? If you can prove yourself as a decent trader, you can use somebody else's money to trade. Okay, you pay 10% of the profits to whoever you borrow the money from, and you get to keep 90% of the profits. That's the pitch I got. And I'm thinking to myself, I make 50% per year. If I give 10% of 50%, okay, on a $100,000 account would be 50,000. That means I can pay 5,000. I keep 45,000. That freaking sounds like a win-win to me. But that's the way it was explained to me. I haven't seen the fine print, and I'm sure there is fine print. Okay? So what is the fine print? What can I do? What can I not do? All right? Am I just throwing a dart and trying to pick a good stock and say, oh, okay, I made it, I didn't make it, whatever. Yeah, it's something I would need to put more time and effort into it. But let's get back to Harley Davidson. Now, I'm asked every single week, what do I think about earnings reports? And I always say the same thing year after year after year. I've seen earnings reports that are positive and the stocks go down. Well, let's take a look at this. Earnings report on Harley Davidson came out on Wednesday after market. Well, Thursday, she went up a little bit and then she dropped like a rock. Well, if it has a positive earnings, why would it drop? Beats the hell out of me. I've seen positive earnings where stocks go down, such as Harley Davidson this week. I've seen negative earnings where stocks go up. Okay, so I don't pay attention to earnings. But let's take a look at Harley Davidson. Now, I did Harley Davidson 3 weeks ago. Okay, right here. Okay, I bought it at 30. What the hell did I buy it at? Hold that thought. Okay, 35.79. I sold the 35s, got $1.84, over 3% coal beans. All right. This account, Harley Davidson. I bought it 36.27. So right on the 36.27 area. And I sold the 36s, got 157. Okay, again, over 3%. Now, third account, Harley Davidson. I did the 35 puts. Okay, so I got to buy it at 35. Big deal. And I got over 3%. Okay, so that being said, all right, check it out. Week number 1, I got 3%. Week number 2, I got 3%. Week number 3, I got 3%. But the stock dropped. Okay, but I still got 369%. Uh-oh, big question over here. Steve, because it drops because there is a lot of liquidity and stops below of people buying, so price usually takes a low before going up, draw on liquidity, gets taken out. I've seen it happen a lot on Forex. Forex is a huge difference between Forex and the stock market. If Forex is open 24 hours a day, you can trade that all day long if you want. Yeah, and then you got to sit in front of the computer. No, thank you. Okay, so anyway, Harley Davidson went down. I'm going to change that. I don't want to look at implied volatility. Okay. All right. So Harley Davidson went down. I made 369% already. Now I really don't care. Cool, but price action terms was saying, yeah, I get that. Okay, that's not what I'm doing. I'm not doing price action terms. I'm just doing covered calls and trying to make sense of the movement. Now, usually when an earnings report's a positive, you would think the stock price would go up. No, not always. Your 30% calendar spread was amazing during class today. All right, Paul. Okay, sorry. Yeah, let's stay focused on what we're trying to do. We're trying to keep it simple. We're trying to keep it safe, predictable, and consistent, all the kind of nice, neat stuff. Now, the reason why I like Harley Davidson so much, number one, it's been in business for over 100 years. That's number one. Number two, they increase their dividends often. Okay, I wouldn't say 20 years consecutively, but it is an American icon. All right, so it's huge with name recognition, name value recognition. There you go, or name recognition, whatever. Anyway, it's over 100 years old. Now, week 1, I got 3%, 3%, 3%. Yeah, it dropped. Big deal. But take a look. The 30-day high was 30 days ago at 37. The 30-day bottom, 31.50. That was yesterday. What usually happens on a 30-day bottom? Usually. Okay, 30-day top, we know what happens. There's profit taking. Okay, people take their profits, the stock drops. Gets to a certain point, well, the numbers look freaking fantastic because the earnings report was coming out. You know, they say buy the rumors, sell the facts. Okay, so the rumors was, they were going to do decent. So great. The option was freaking crazy, 3%. Great. Well, see, Monday, I jumped in, got my 3%. Monday, I jumped in, got through my 3%. Monday, okay, I'm still at 36. I still got 3%, but then she dropped. What's going to happen in the next few weeks? Well, I like 2 days to the upside. Dave, I wasn't too short MicroStrategy so bad. I'm not quite sure what that means, Dave. I'm gonna blow it up a little bit, read it again slower to see if it makes sense if I read it slower. Let's see what it is. I want to short MicroStrategy so bad. Uh-oh. Isn't that MU? I'll take a look at that. Just hold on a second. So it actually had nothing to do with the topic of conversation. The topic of conversation is Harley Davidson at the moment. So take a look and then think logically. Okay? Use a little bit of common sense here. Okay? Down, up, down. Today was an up day from yesterday's bottom. So yesterday was also the 30-day bottom. I like 2 days to the upside before I jump in. So here's what I could do, hypothetically speaking. Now, considering I own a bunch of it at 36, well, 36 is up here. Now, I could buy it down here at 32, and then my dollar cost average would be 34. Okay? What is the 34 going for? Well, it's only going for 5 cents. That's crappy. Or I wouldn't short MSTR while Bitcoin is picking up. I wasn't talking about, I don't do MSTR. Not at all. Or I could, hypothetically, sell a put on the 33s. 33s are giving 3%. Okay, that way I'll buy it at 33 and I'll get 3% right from the beginning. Okay, and then I'll dollar cost average down, and then next week after she turns around and goes back up again, this thing will be probably around 34 sometime in 2 weeks. I've already got 3%, 3%, 3%. That's 9%. If I'm looking for 1% a week, well, I'm set for the next 6 weeks of getting nothing, and I'm still up 1% per week. Okay, 3, 3, 3. Okay, if I'm looking for 1, well, I'm up 9 already. So I got 6 in the bank that I can just wait and not have to worry about. And she's at a 30-day bottom yesterday, bouncing up, going to the upside. Perfect time to jump in. And if you do decide to jump in first thing Monday, well, the 32, 36s, the closest is going to be the 30, 33s, which are going for 15 cents. Really, that sucks. Oh, we should be at 32 because the last trade was 31.85. It should be 32, which is over 1%. I hate it when the market maker does that. The 31.30, 32.30, that's over a dollar spread. That usually never happens. During hours, during what do you call it? When the market's open, it's usually 1, 2, or 3 cent spread between the bid and the ask. It's just a little confusing for us to try to figure out the actual numbers when they skew the numbers so dramatically. All right. Anyway, so hopefully that explains it. I'm not 100% sure if that makes it. People are sick now from McDonald's burgers, so the stock might go down. Well, actually, Mickey D's, the stock did go down. All right, Boeing. Somebody wants to take a look at Boeing. We already looked at McDonald's. We looked at Harley Davidson, Boeing, BA. I don't know why you want to look at that one. Well, they do get, what do they call that? Government contracts. Yeah. Boeing is a big government contract company. Well, high, low, where was it? Where is it? What's the direction? Up, down. That's where we are now. 55.12. The 155s are going for 350. That's 2%. If you like Boeing. Okay, so a year ago, Boeing is at 182. The high of the year, 268, was in the middle of December. She drops and drops. Look at where the bottom is. The bottom was 2 weeks ago. Okay, on the 14th at 145. Okay, she kept dropping. Here's the bottom of the year. Okay, she bounces up 162, 163. She pulls back 1 day to the upside. Look at 1 day there. There's the bottom here. She goes up, pulls back 1 day here, 1 day up. So she's most likely going to start to go back to the upside. Most likely. Never guaranteed. There's no guarantees. Oh, big question over here. What do we got? The Anti-Enemy Association leader. Can you wish my friend a happy birthday? Tell him to date people his own age. Wow, really? I don't know if you actually think I have my love life in order. No, I am not in no position to give anybody advice. All right. All right, so that's Boeing. Do I like Boeing? Well, Boeing 155 is going for 350. Okay, that's close to 2%. Close, not quite, but close. All right, forced entry. Looks like an island reverse top as well. All righty. What? Polygon-matic crashing. I have no idea what that means. What graph do I need to follow in app form you can download? Ooh, J-Will. Now, this is going to sound weird, J-Will, okay? Even though it was my generation, okay? My generation that created the internet and all this crap. Cryptocurrency, no thank you. Doesn't mean that everybody in my generation understands how to use it. Any ideas on applied digital, especially compared to digital? Yeah, no, sorry. Never heard of them. I don't do companies I've never heard of. Okay? All right. So Jay Will, I have no idea. All righty. Amy, how are you? Hey, Austin's here. Polygon is opportunity. Okay, I have no idea what you mean by that, but all righty. More power to you. Have fun with it. Okay, Jose Mateo wants to like Johnson and Johnson, J&J. Dividend king extraordinaire. They've been in business for over 100 years. Okay, but I very rarely ever buy Johnson & Johnson. And here's why. You ready? 160.99. So you look at the 160s, 182. I'm losing 99 cents right away. You take 99 cents off there, you're not even getting a 0.5%. Johnson & Johnson never had good premiums. I've never bought Johnson & Johnson because the numbers just don't work for me. When do you decide to cut and run on underlying equity position? Do you keep it open and rewrite another weekly call against the underlying stock? Exactly. Rule number 2, never sell at a loss. Defeats the whole purpose. Now, if you did rule number 1 properly, never buy a stock you do not want to hold on to long term. Means if you're going to buy a stock, buy it as if you're going to buy it and hold it until the day you die, regardless what happens to it. And if that company is consistently profitable year after year after year after year and consistently increases their dividends, every single year you're going to get a larger portion of the profits. Okay? Rule number 1, never buy something you do not want to hold on to long term or something you do not understand. Rule number 2, never sell at a loss. This dividend stock talk, not crypto, not Forex. You're absolutely correct. No crypto, no Forex, no futures, no quick, what do they call those things? Fast charts or quick charts? I forget what they call those. Something contracts. I don't know. Speed contracts, mini contract. I don't know. It's a new thing going out. Anyway, yeah, a lot of people making big money with it. Well, people make a lot of money. But where do you think that money comes from? It comes from other people losing a lot of money. Okay, so the money's got to come from somewhere. All right, let's get back to what are we looking at? Yeah, forced entry. I never sell at a loss. As a matter of fact, right now I still have WYNN, WYNN. I bought it back in May. Okay, it has dropped. Okay, and I keep selling covered calls against it as it goes down. So at one point, it got to a bottom. Now it turned around, come back up again. But unfortunately, I sold an option down here. Stock's up here. I can't let it go because there's too much money in between that I would lose. So I have to wait for the stocks to come back down. I got to raise the price up so it meets somewhere in the middle. So yeah, they don't all work. But my average is over 1% every single week. Rewrite another. Okay, we already did that one. More questions. Hey, Hollywood's here. How's it going, Hollywood? Berkshire Hathaway on sale. Yeah, no, it ain't. Berkshire Hathaway doesn't have dividends. It's a no. Okay, 2 weeks before the EX date, buying on a Monday, then Elevate writing a covered call. Yep, exactly. Time value evaporates quickly with 2 weeks to expiration. I like it. Well, how about you do it with 1 week to expiration? Okay, the time value decreases exponentially. That means really fast. Okay, so always have the odds and probabilities in your favor. If we know when the company's going to have a dividend, because you know there's only 2 reasons a stock moves. Only 2. One is a known reason, something we can plan for, and one is an unknown reason. Well, what's an unknown reason, you ask? Uh-oh, question. David's got a question. Stop. Do you have any tips? Dividend stocks to look on. I create a cake of dividend companies and would love to add 1 to 3 more. Okay. I'm not quite sure what a cake of dividend stocks look like, but it is what it is. I know absolutely nothing about you, so I honestly cannot tell you anything. Now, I always tell people, if you really want to talk to me, if you really want my opinion or my advice, you're actually going to have a conversation with me. Not on the little keyboard, actual face-to-face conversation, or on the phone, or live Zoom, whatever. If you want to drop me a number, I will give you a call. Other than that, I honestly don't know anything about you, so I can't say anything with any that would carry any weight. That had no meaning to it whatsoever because I know absolutely nothing about your goals, your dreams, your risk factors, nothing. That being said, time value evaporates quickly. I like it. Okay, Hollywood wants to look at Paramount. Of course he wants to look at Paramount. He's in Hollywood. Why wouldn't he? Here we go, right there. Do you do one-on-ones, Kent? Yes, I do. All right, Hollywood, Paramount. I like Paramount, P-A-R-A. Now, Paramount is on Warren Buffett's list. All right, let's take a look. High, low, where was it? Where is it? Look at this, up, down, down, 1027. 1027 at the moment. The 1030s, if I want to buy it on Monday, the 1050s are going for 2 cents. What, are you shitting me? Hell no. Sorry, Hollywood, that's not a no. That's a hell no. Because not only is the premium crappy, look at everything underneath it. 0, 0, 0, 0, 0, 0. What the hell happened? Paramount was good at the beginning of the year. My money is still stuck on CC. Hollywood, I told you about that, CC. Chemers, right? I said, why did you buy that in the first place? And you couldn't give me a good answer. All right, Hollywood wants to take. Hollywood, you want to look at everything, man. Paramount, Kohl's, Walgreens, and Chemers. I should limit you, dude. Kohl's, KSS. Now, for those of you who don't know who Kohl's is, oh yeah, so Paramount is a big fat no. Okay, not that it dropped so much. That's not it. Okay, I love buying at a bottom because you're going to make most of your money buying low and selling high. Well, you can't get much lower than the low of the year. Okay, which was back in June. She went up, down, up, down, up, down. Now we're here at 1027. Unfortunately, the 1027's not even worth it. Nope, not worth it at all. So we're going to bypass that one and jump to Kohl's. Okay, so here's Kohl's. High, low, is, direction, up, down, sideways. We're at 1904 at the moment. In the 19s, Luke had a question. Do you ever speculate on companies not paying a dividend to make a profit? No, I do not. Okay, now, Luke, the reason I say I do not speculate in everything I have pays a dividend. Everything I like has a dividend and an increasing dividend at that. The reason being, I'm 60 years old. I'm retired. I need a consistent cash flow. So I need a strategy. A strategy that will give me a simple, consistent, predictable cash flow so that I can pay my bills. Damn it, I got something in my eye. All right. Empty pockets. Hey, back again. This isn't a buy and hold strategy. Buy 100 shares, sell a covered call, collect at least 1% a week. Shit, that sounds like something I would have said. But anyway, yeah, he's right. I buy it with the intention of selling it by Friday. Okay, I'm buying it at the exact same price that I'm selling it for. So where's my profit? My profit is right here in the premium, the insurance policy. That's what stock options were originally intended as an insurance policy for people who had big chunks of stock and were afraid to lose money. So they came up with an insurance policy. Insurance companies always making money somewhere, somehow. So to protect their gains. So if we're looking at Kohl's, the current price is $19.15. So I have two options. The 19s, which are going 51 cents. Nice. Or the 1950s, which are going for 29 cents. Both of them are over 1%. So that's good. But the 19s are a safer bet. The further in you go, or the higher up you go, the safer the bet. The further down you go, or the further out of the money you go, there's less safety, but higher probability. Higher profits. Higher profits, higher risks. Lower profits, lower risk. So the risk that I'm looking is a simple, safe, predictable 1%. So if I buy it at 19.15, sell it at 19, I'm collecting 51 cents a share. Let's take a look. But before we take a look and actually do a practice one, well, let's check the chart and see if it's okay to buy it. Because I don't want to buy it at the high and I don't want to buy it at the low. I want to buy it at the right time. And timing is everything. All right, a year ago, we're at 21.87. The top of the year was 26.63, and that was in the beginning of April, right here. Okay, she shot up, pulled back, up, down, 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 up, down. That's all they do, really. So if you follow it and you watch it and you see where's the best time to jump in. So if she goes up, that's the time to sell. She drops, that's the time to buy. On its way back up. So let's take a closer look. The bottom is right here, the 23rd of September. Okay, and that was 1789. But look at the movement. Up, down, up, down, up, down, up, down. So it's still coming down. The bottom is here for the 30-day period. So I want this thing to come down a little bit further, but she might have stopped coming down because look at yesterday. Yesterday is lower than today. So yesterday, Thursday, could actually be the 30-day bottom. I don't know. Or the new bottom. All right, where is it? 25th, right there. Okay, so here's the last 30 days. Okay, 1960, 2120, 1860, 2120 to 19. The 19s are going for 51. Let's see what it looks like. Okay, let's get rid of this. Let's do the 19s. Change it to covered call. The 19s are right here. All right, I just want to do 100 shares because I don't want to freak people out. Because anytime I do 1,000 shares, people say, oh, that's a lot of money. But it's still percentage. I'm looking for the percentages, not the dollar figures. Okay, all right, so buy one covered call of Kohl's, 1 November 24th. That's the expiration date of the option that I'm selling. So I want to do the $19 call option against the stock. Well, the stock's right now at $19.15. At the market to open, well, my break even is $18.51. Well, if the stock price is $19.15 and my break even is $18.51, that means anything over $18.51 is going to be a profit, right? Okay, so the maximum profit I'm going to make on this one trade is $48.50. So let's break out our calculator and see what that looks like. All right. $48.50. What is it costing me? Okay. The cost of the trade plus commissions, $1,852. Okay, divided by $1,852. My rate of return for the week on this particular trade that I just pointed out is 2.6%. So the question you should have in your head at this moment in time, well, there should be a bunch of them, but the main question you should have in your head at this moment in time is, does this make sense? That should be question number one. Does this make sense? Buy a company that I've heard of. If you've never heard of Kohl's, well, don't buy it. It's that simple. If you don't know what Kohl's does, don't do it. Okay? Probably a good portion of you will know who Kohl's is. All right? Now, second question you should have in your head. Do I like Kohl's at this current price? Am I willing to hold on to Kohl's until the day I die or it hits my target price, whichever comes first? Now, you're going to buy something, it's going to drop to the floor. I don't care how much you like it. I don't care what they say on TV. I don't care if the pigs fly over the moon. You're going to buy something, it's going to drop to the floor. On the flip side, you're going to buy something and it's going to shoot to the moon. It's going to gap up and you're going to make a shit ton of money overnight. It happens. Okay? There's no predictability and there's no guarantees in the stock market. I just like having the odds and probabilities in my favor. So let's go for a list of the probabilities. Probability number one. If all options expire, if 80% of all options expire worthless, I want to be on the selling side of that. I want to be in the 80% team. Okay. If the stock goes up before the dividend is paid, well, that's when I want to buy, just before the dividend. Okay. If there's profit taking on a 30-day high and cash accumulation and buying opportunity at the 30-day bottom, well, I want to buy at the bottom when she turns around, goes back up. Because look at right here. Okay. Here's your bottom right here on the 7th. 1, 2, 3, 4 days were higher before she started moving up. Okay. And over here, look at this bottom right here. 2 days and it went up. I like buying 2 days after a bottom. And this right here, the 24th, which was yesterday, has a new bottom. 3 days down, here's the bottom. Today is higher than yesterday. So if Monday is higher, well, that's a perfect opportunity for me to jump in. I already own Kohl's, so there's no point in me jumping in. But besides the point, if you like it, okay, or if I like it and I want to buy some more, I jump in at 19.15. I sold the 19s. I collect 51 cents. That is over 2% rate of return for 1 week. And all the stock needs to do by next Friday is stay above 19. Well, 19 is right here. Okay, 19 is right here. Okay, here's the bottom over here. Here's the top over here. She goes up, down, up, down. What happens next? Well, once it finds the bottom, she's going to turn around and go back up again. That's predictability. That's consistency. That's probability. I like odds and probabilities in my favor. Okay, let's move on over to Walgreens, WBA. WBA. I like me some Walgreens. As a matter of fact, I like Walgreens so much, I have it in about 4 accounts. It is what it is, right? If it's consistently giving me money every week, why wouldn't I own it? Walgreens has been in business for over 170 years. They own a lot of shit. There's over 8,000, I think it's 8,700 stores worldwide. And they actually have products that are in 22,000 stores worldwide. So it's not just the pharmacies that they own. All right, so anyway, Walgreens. High, low, is. What's the direction? Up, down, sideways. 9.33. The current 9s are going for 40 cents. I wouldn't do that one because you're losing 33 right away. So I lose 33 right away. Well, I'm only making 7. That's a hell no. If I do the 950s, well, I'm getting 14 cents. 14 cents is 1.5% of 9. So that's a yes. I like that. All right. That being said, I like the 950s. Well, let's take a closer look at the chart. See what the chart tells me. A year ago, 21.41. She topped off at 27 at the end of the year in December. Well, from there, she kept on dropping. 30 days ago exactly from today was the bottom of the 30-day period. So what happened at the bottom of the 30-day period? Well, she goes up. What happens at the 30-day high? Well, profit taking. Where are we now? Right here, 926. Now, it's still going down. Okay, today is lower than yesterday and lower than the day before. So we're not quite at a new bottom. So I keep my eye on Walgreens. Well, because I have it in 4 different accounts. That's why I keep my eye on it. As it's coming down, it's going to find a bottom. Look, it's getting ready to turn and go back up again. So if we look at it Monday, Tuesday, Wednesday. Now, I'm here twice a day, every single day. Except on Saturdays and Sundays. I take the days off. Except at night. So I am here every single night. But during the day, I'm only here 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. All right. So she's getting ready to turn. So I will keep my eye on this. Take a look at it next week. When the opportunities jump in, I will jump on that one and go from there. Hollywood, you want to take a look at Chemours too, huh? That's like number 4 you want to look at. Hold that second. CC. Okay, now. Chemours. High, low. Well, that's an anomaly. Holy shit, what the hell happened there? That's a black swan and a half, dude. High, low, is. What's the direction? Up, down, up, down. Okay, so we're at 1832. See, I hate it when I do this. 1968. That's $1.68 spread. No, 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 no. It's usually 1, 2, 3 penny spread during the day. So I'm going to go by this price here. 18 is going for 60 cents. The 19s are going for 20. Yeah, so you're getting 1% out of this one if you buy it. Now, Hollywood, you say you're stuck in it. Okay, well, look at the premiums. Okay, I'm going to start changing my philosophy when it comes to stocks and the premiums. If I see the 3 strikes out goes to 0, yeah, I'm going to stay away from those. Okay, now what do I mean by that? Well, let's take a look at Dell. Look at the premiums on Dell. Okay, 1 strike out, 2%. 2 strikes out, almost 2%. 3 strikes out, well, that's more than 1%. 4 strikes out, 1%. 5 strikes out. Look at this. I love the numbers all the way down there. Tremors, I'm going to stay away from it. I'm going to start looking at companies. Okay, Energy Transfer. Look, 2 strikes out, 1 penny. 3 strikes out, 0, 0, 0, 0, 0. Yeah, I'm staying away from companies that look like this. If they have crappy premiums, I don't want nothing to do with them. Okay, because stocks go up, stocks go down. Most of the time, my stocks just roll forward. I'm going to prove I'm a human. Why do I have to do this all the time? Here we go. They want to make sure this is not pre-recorded, so I have to manually do that. All right, so yeah, I don't like Tremors. The numbers just don't work for me, dude. Okay. Vietnamese. You have to own 100 shares of a covered call. No, you're absolutely right. 100 shares of a stock equals 1 contract. Okay? 5 contracts, 500 shares. James, how about McDonald's stock? We already looked at that, Wang. Ooh, Will. Pfizer. Ooh, Pfizer's a good one. PFE. Pfizer. First thing we always want to look at. The high, the low, where was it? Where is it? What's the direction? Down, up, down, sideways. 28.52. The 28.50 is going for 59. That's well over 1%. If I'm looking for a safe, predictable 1% per week, this is a nice candidate. Let's take a look. Okay. A year ago, Pfizer was at 30.68. The bottom, look at that, like a double bottom right there, 25.20. Right there at the beginning of the middle and the end of April. Then she shoots up 31.50. The last 30 days. Look at that movement. Look, up, down, up, down. Yeah, so Pfizer, I definitely wait to find out where the bottom actually is. Okay, you can see the movement. The movement. I love a predictable movement. Look, up, down, up, down. Okay, we're still coming down here. So I'm going to write Pfizer down for next week to see how the movement actually going to create. No, it's not there. So it is now. PFE. Pfizer. All right, so that's Pfizer. Colton. You need to get a T-shirt that says, "Yes, sweetie, sweet." I'm aware of that. There was 3 sayings that I really like. Well, there's this one. What the hell were you thinking? But wait, it gets worse. And there was one more. I forget. Does anybody know what that third one was? I'm never buying a Harley again. Worst bike ever. Okay, Hollywood. Funny thing about Harley Davidsons. I think I told the story earlier. I traded my Harley Davidson in for a Goldwing. Now, my Harley Davidson didn't really break down, but here's the funny story about my Goldwing. I'm cruising around on my Goldwing one day, and I'm not so sure if any of you guys ridden a bike before, but when you start losing air in the back tire, you get what's called travel. So as you're going by, the back end swings like a fish, and it's like very uncomfortable. Not uncomfortable as like, no, not that uncomfortable. Uncomfortable, like you feel you're going to crash because you feel you don't have much control. So I pulled over to the side to call a tow truck. Tow truck driver takes a look at the bike and he says, "Shit, man, I never tow Goldwings. I'm always towing Harley Davidsons." He says, I've never picked up a Goldwing before, but every single week I'm picking up some Harley. So anyway, yeah, Goldwings have a good reputation of being made well, right? With very minimal work needing to be done. Harley Davidson's breaking down all the time. All right, Colton, you want to take a look at Tesla, AGNC, empty pockets, huh? AGNC. We'll take a gander at it. Hold on. Okay, I had a couple of people ahead of you. Colton wants to take a look at Tesla. Okay, we'll do this really quick, right? TSLA, enter TSLA. Tesla, it's a big fat no. A couple of reasons why it's a no. Number one, it's at the high of the year. I never buy at the high of the year. Okay, you got a big, huge gap up like this. Well, what do you think is going to happen after a gap up? Well, there's going to be profit taking. This thing's going to drop. Two, they have no dividends. They don't share the profits. It's going to be a no. Kevin, thank you. How would you write a call? That part confuses me because I own Altria. Well, okay, so Ivan, you're saying, how would you write a call? That part confuses me. I'm not quite sure why you think that confuses you. Okay, so let's take a look at Tesla for a second. We'll write a call on Tesla. First thing you got to do is you got to buy the stock. Once you buy the stock, you sell a call against it. Okay, so if I have 100 shares of Tesla and I want to sell a call option, let's say 267.50, because right now it's at 267.09, 267.50, right? I come over to this part right here and I just click. And there you have it. Selling a call option. Oh, got a question over here. Question. Big Money Fuentes. ¿Qué pasa, amigo? I have a few calls on CORZ, the Bitcoin mining company. I bought back in April when the stock was 3 and now it's 13. My call expires 125. It's up to 10x. What's your thoughts on CORZ? I've never heard of them. And I have rule number 1. Never buy something you don't know or don't understand. Okay? Rule number 3, make sure it has 20 years of consistent increased profits. I've never heard of CROZ. So for the fun of it, CORZ. Core Scientific. Historical data. At $13 now. Dividends only. Oh, look at that. No dividends, no thank you. Sorry, dude. I don't buy stocks that don't have dividends. I'm not looking for capital appreciation. You bought it at 3. It's now at 13. Here's something to think about. Okay? Not advice. It's not, a tip. Nothing to that effect. But it's just something to think about. You ready? It ain't a profit until you take it. Okay? And nobody ever went broke taking profits. What you do is totally up to you, but it's not a profit until you take it. Just because it looks good on a piece of paper don't mean shit. You can't take that piece of paper and go to Starbucks, but wait, look, my stock is up. No, that doesn't mean shit. Okay? People understand, in God we trust, all others pay cash. Okay? It's not a profit until you take it. Okay, so that's how you sell an option. If you own the stock, however many you own, if you own 200 shares of this company here, great. Well, let's get this out of the way. All right, so 2 contracts. 2 contracts equals 200 shares. Okay, and how much is that? Well, my friend, that's $1,800 for 2 contracts at that current price. So selling an option is really not that difficult. You just got to understand it's a new language. Okay, so buying and selling stocks. That part's easy. You buy a stock, you sell a stock. Okay? The option, once you buy the stock and you own it, Well, you can sell that to someone else, and that gives them the right to buy it from you at a certain price by a certain date. So this one right here, I isolated here. Okay, it expires the 1st of November 2024. That is this coming Friday. Okay, if you don't want to do that one, well, you can go 3 months out. Let's take a look at January. Okay, at the current price, $269, $270. Well, the 270s are going for $27 a share. So at $27 a share, what does 2 contracts look like? 2 contracts look like $5,500. So the further out you go when you're selling an option on something you already own, the further out you go, the more you make on it. And the stock doesn't have to move at all. The stock can stay exactly where it is. Okay, but if the stock goes up, you still got to sell it to them at the 270. Because whatever strike price you decide on, okay, because you have a choice, decide what strike price you want to sell. Okay. Okay, so currently this is the price here. And here's all the different strike prices. Well, that's not all of them. That's just 14 of them. This is all of them. Okay? You can sell the 5s, you can sell the 60s, you can sell the 90s, the 100s, the 105s, the 110s, the 185s, the 190s. You can sell the 260s, the 265s. You can sell the 390s, the 400s. You can sell the 510s. You can sell the 550s. You can sell whatever you want. If you own a stock and you want to sell a covered call, giving somebody the right to buy it from you at a certain price by a certain day, you just got to choose which price you want to sell it for. Okay, if you bought it for $267 and you want to sell it for $450, well, you could do that. But what are you going to collect? You're going to collect $1.51 per share. Well, it has value to it. Look, the $450, it has $1.51 value per share. The options are awesome if you know how to use them. Okay, all of them is a little too much. I like looking at 8 because 8 is great. 8 is plenty. All right, so let's go back to where we were. All right, so let's roll up. We had 82 questions. Can you explain how options work? I meant to do it with it at sell calls or puts. Okay, basically, Amy, the way an option works is you're giving someone the right, a call option. You're giving somebody the right to buy a stock that you already own from you at a certain price by a certain day. Okay, big money, you're welcome. Okay, a put option, totally different. And I usually don't teach put options because I don't like them. I do them, but I don't like them because you're forcing someone to do something. Okay, so a call on the right, on the left side, these are call options. On the right side, those are put options. You always see me looking at this side over here because I like positivity in my life. I watch happy movies. I don't watch bang, bang, shoot 'em up, kill 'em movies. I don't like getting those images in my head. Call me weird if you like. Doesn't mean anything to me because I'm a happy person. I want to stay happy. All right? So there's an old saying, garbage in, garbage out. So if I keep looking at those, bang, bang, kill 'em, shoot 'em up movies, that's what's going to be in my head. Yeah, no, thank you. I would prefer flowers and butterflies and bunnies. Yeah, no. I'm not that far off. CJM Philly, how are you doing? You're new here, dude. I've never seen you here before. Welcome to the show. All right, anyway, so that's Tesla. I don't trade Tesla. I don't. I'm just using it as an example because somebody asked to take a look at it. I only do Ducatis and Yamahas from now on. Never mind, AGNC doesn't have shit for options. Whoa, I'm going to cross AGNC off of my list then. Okay, Hollywood, I wouldn't do a Ducati. Sorry. I want to stick to tried, true, consistently working motorcycles. Honda, Yamaha, Kawasaki. Easy to find parts for. Let me check in. Let me check. I am curious now. All right. We can communicate with each other. Joanna, how are you today? I'm not quite sure what that means, but alrighty. Can you explain how? Yeah, I already did that. All right. No, I don't. I've never really driven a Ducati. Okay, but I'm not really monogamous about anything. If I have a key, I put it in, turn it. If it starts and it works properly, fine. I really don't care who makes it. Isn't that weird? I honestly don't care. All right. I think I bought a Suzuki car once. Who the hell buys a Suzuki car? I'm sitting at it, looking at it. It's running, and I can't even hear it run. Okay. The price was right. So I said, sure, why not? Reggie Bo Jackson. Hey, James, when you look at Harley, can you show us seasonality? Thanks. Oh, well, you're right. I didn't show seasonality on Harley Davidson. Okay. Harley Davidson. Holy cow, look at that. Yeah, see? I should have had that up there also. See, I have no problem holding on to Harley Davidson. Look at it. Nice upward trend towards the end of November. Okay, so all the positions the Harley Davidson I'm in at the moment, I made 3% this week, 3% last week, 3% the week before because the earnings was coming up. Positive earnings, stock went down. What the hell's with that? But it is what it is. Whoops. Oops, I hit the wrong button. All right. Yep, hit the wrong button. Look. Down, up, down. Now she's going back up again. Perfect time to jump into Harley Davidson for me. All right, Jane. All right, we did that. Guidance. Okay, cool. Dividend stock talk. All right, all right. Ivan, I see covered options as only choice or single. I am. I don't know what I am. Okay. Ivan, Fannie Mae, once you buy 100 shares, you can sell one contract. Sell one to open, one contract, covered call contract. Yep. It was probably a future guidance. I have no idea what that means. Love your streams also. Thank you, Jesse. All right, let's keep on going. What other questions do we have? Joanna, thank you there, young lady. My MU is Micron. Yes, I know that one. We're going to take a look at that one. All right, Jill, how's you and the old boy doing? I didn't see the old boy sign in yet. PFE, we already looked at Pfizer, Jill. Sorry. Hey, pal, Gen X 67. 64, dude. Way to go. Okay. OKLO is the way to go. OKLO. What the heck is O? Don't tell me that's a stock symbol. OKLO. What the heck is that? OKLO. That is weird looking. It is. Look at it. There's absolutely no volume last year. The volume over the past couple of months, crazy. Seasonality on this thing doesn't exist in December. Well, what the hell does that mean? OKLO. No dividends. No thank you. That was pretty quick. All right, dude, I'm going to have to say no to OKLO. Sorry. World is going to go nuclear for AI energy. Okay. Chris, down on Merck and CL positions. Any thoughts on selling puts to get average cost lower? Pull up these two. All right, Chris, we'll take a look at those in a second. Ryank, how are you doing today, Ryank, over here? All right, anyway, so DJ2 wrote calls today for November 1st. Yes, we looked at DJT today. I'm not going to go over that one here. But Chris, let's take a look at MRK. Merck, MRK. Now, I like MRK, and I also like Colgate-Palmolive. But I don't know, Chris, where you jumped in. All right? So let's take a quick gander. Okay, Merck currently is at 103.98. Now, I know we looked at Merck last week and it was a no last week. So I'm not quite sure when you got in. But here's the high, here's the low, here's where it was, here's where it is. It went up, it went down. We're currently at 104. The 104 is going for 235. The 105 is going for 190. The 106 is 145. The 107 is one. Look at, they're all given over 1%, except for the 108, which is 5 strikes out of the money. Well, that can be expected. Okay, but yeah, all the numbers look great here. But what is the chart telling me? Just because the numbers look good, just because I can get a decent return for a week, well, is it the right time to buy? Because see, I don't want to fight a trend. I do not want to buy it when the trend is going down. I want to buy it when the trend is starting to go up, not after it's been up for a couple of weeks. Yeah, no, that doesn't work for me. Okay, so a year ago, we're at 103. Now, isn't that kind of silly? Think about it. If you buy a stock and just hold on to it, look at this one. If I bought it a year ago at 103, well, where is it now? It's at 103. What did you make in a year? So if I bought this a year ago, 103, well, it's right now it's at 103. See, that makes no sense to me whatsoever. Because if I bought it at 103, I'd sell it when it was right here, when it hit 105. And then I would have bought more when it went down to 100. And then I would have sold it again when it hit 105 again. Then I would have bought it when it went down again. And then I bought, yeah, up, down, up, down. Look at all the movement, all the opportunities you could have bought and sold. But no, you buy it a year ago, you still have it, and it's still at the exact same number. What did you get? You got 4 dividends. That was it. Yeah, no thanks. I don't do that. I buy, I sell, I get 1% a week. That's 50% return per year. Hey, Wildcat Sam's here. All right, so Merck. The bottom of the year was back late November, that 99.96. Okay, she tops out the end of June at 134.56. Drops, retrace, drops. Okay, so this one, I would definitely sit back, wait. Now, you said you jumped in and it's down. I don't know where you jumped in at, so I'm not quite sure what I can tell you about it. But if I'm going to jump in next week or the week after, I'm going to wait for the bottom to come, turn around, and then go back up again. Because that's all stocks do. They go down and they go back up. They go down and they go back up. That's about all they do. But the nice thing about Merck, look at the premiums. They have nice premiums, even 5 strikes out of the money. So depending on where you jumped in, you can put your strike price closer to where it is, but far enough away where you don't get called out. Well, how do you figure that out? Well, right here, this number right here, where the hell did it go? See right here, the R? The R is the range of the day. So wherever you put the cursor, like today's range was $2.63. Yesterday's range, $1.36. Okay, $1.16, $1.19, $1.36. So it tells you what the average movement is on a day. So depending on where you jumped in, take a look at what the premiums are. You might have to go out a week or two. So if you go out 3 weeks, well, look where the current 105 is, because right now it's at 105. Well, 3 weeks out, the 105 is going for 310. Well, the 105 right now is only going for 190, right? But 3 weeks out, it's going for twice as much. So even though the stock dropped, it's still paying a premium. So wherever you jumped in, that number never changes. You could, however, dollar cost average down. Now, you could do that buying it at the open, because right now it should be right around 104. Because I don't like it when they have a spread like that, 104 to 105. It doesn't make sense because your last trade was 103.98. All right. So anyway, I don't know where you jumped in, so I really can't give you that much advice one way or the other, or my opinion. But let's take a look at Colgate-Palmolive, CL. Okay, these premiums aren't that bad either, but they're not the greatest in the world. But high, low, where was it? Where is it? Look, it jumps up, it pulls back, and then it gapped down. Why did it gap down today? That's a big question. All right, so a year ago, we have the bottom of the year, 71.38. The top of the year was what? A couple months ago? And that was the 5th of September, 109.30. So what happened? She went up, she came down. She went up, she came down. She went up, she came down. She went up, gap down today. Why did it gap down? Is it something that's going to change the company forever, or is it just a bug on the windshield? What does a bug on the windshield mean? Well, it's just irritating at the moment, but throw the wipers on, it disappears and it's gone. Like, remember when the Exxon Valdez crashed in the Northwest? It was in the news, and Exxon Mobil got bashed day after day after day. Same thing happened with British Petroleum when they sprung a leak in the Gulf of Mexico. They were bashed day after day after day. But if you look at those companies now, what has it been, 20 years since the Exxon Valdez, and about 4 or 5 years since the British Petroleum? Stocks have recovered, and they doesn't even show up. When is the last time you heard about the Exxon Valdez? Probably 10 or 15 years ago. When's the last time you heard about British Petroleum sprung a leak in the Gulf? You probably don't hear about it anymore. So is this little incident, whatever the hell it was, is that something that is on everybody's mind? It should be today, tomorrow, the next day, for the next couple of weeks until it recovers. Well, look where it is. The 30-day high was 30 days ago. The 30-day low is now. So once this finds the bottom, and it'll find the bottom, it will turn around and it'll start going back up. And that is a great place to buy, at the bottom, because you can't get any lower than the bottom after a big drop. This is the low of the year. Okay, you make money in the stock market buying low, selling high, and you can't get any lower than right here. So it is 10:37 right now. We have 156 people here. So here's the deal I'm going to make you. It is a Friday night. I have no plans. I'm going to go outside and just sit in front of a fireplace, and just chill, have a couple of drinks. If we can get the audience over 200, I will stay at 11:30. At 11:30, if the count is over 200, I will stay longer. But if it's under 200, 11:30, I'm out of here. Okay? Because I've been here since 9 to 11:30. That's 2.5 hours. All right, so Colgate-Palmolive, I'm going to write down for next week because I want to keep my eye on it. CL. Double jolly good. So again, I don't know where you jumped in. Wait a minute, everything just moved. Where did it go? Uh-oh. Yeah, if I don't pay attention, they all disappear. So let's go back. Where were we? Right there. Here we go. Okay, forced entry. I heard Elon's net worth is now 275. Okay, cool. You have to own the shares. Okay, Z. It's all about maximizing shareholder value. Okay, do you ever trade SPY? Never. Now, Lay. Okay, Lay. Let me tell you why I don't do spiders. SPY. Number one reason I don't do spiders is a little out of my price range. $577 a share. That's a good reason not to do it. Number two, look at where it is. It's at the high of the year. Yeah, it's another reason why I don't do it. But wait, it gets worse. Let's go to Yahoo Finance, and we will put spiders, SPY, and we will take a look at the dividends that the spiders pay. Because I'm looking for weekly cash flow. Really don't care what it does. Honestly, I don't. I'm not looking for capital appreciation. I just want cash flow. All right, so let's go back just 20 years to 2004. All right, so 2004, pay attention to these numbers. Okay, now remember, here's one thing you got to remember. Number one, I'm retired. Number two, I don't work. I don't have an income coming in other than the trading that I do. The trading that I do on my personal account, I get 1% per week. Consistently, predictably, simply, and safely. Okay? I do not have the desire, nor do I have the extra funds to put into something and wait and watch it grow. No, I need cash flow. And there's a lot of retired people out there like me that are in that same position. That is my target market. People like me, Gen Xers, and older. All right, so let's take a look at the numbers and see if you can pay attention to the consistency of growth. Now, remember, a dividend is a portion of the profits the company gives back to the investors. So let's read them on the spiders. All right, an 04, 40 cents, 41, 47, 35. Wait a second, hold the phone. That's an 8-cent decrease. Well, 8 cents doesn't sound like a lot, but wait a second. 8 cents on a $47 stock, that's almost 20%. A 20% cut. Okay, so if you're making, let's say, $1,000 a month or $1,000 a week, and all of a sudden the next one you get is down 20% to 800, how the hell am I going to pay my bills? Now, I've never seen inflation go backwards. I never have. Okay, now when you see gallon of gas, like what is it, $3 now? Have you ever seen it go down to 2 or to 1? No, it always goes up. All right, inflation usually always goes up. So I'm losing 20% right here. But the next month went up to 57. Does that really cover it? Maybe, maybe not. But look, it goes to 35 to 57. Then it goes back to 47 again. Another 20% cut, or 23, or whatever. 49, 52, 67, 52. That's 8. That can't be right. 52 to 67, 67 to 52. So it went up 15 cents. That's a nice increase. But then it went down 15 cents. Then it went to 56, 58, 79, 55, down by over 20 cents, which is 25% decrease. So it goes up and down. Look, 66, 72, 78, 64, 67, 69, 72, 56, 52, 51, 48. Fuck no. Up, down, up, down. But wait. It gets worse. It does, really. Trust me, it gets worse. Watch this. We're going to go to the summary, and the summary gives us all the numbers. Okay, great. Well, right now, the stock is at 579. Okay, it's down 20 cents. Big deal. But this number here, now, if you didn't know, this screen behind me, this one right here, is live on YouTube. You can sit on your big, easy, comfy chair or your couch and watch it on your big screen TV. And then you can see these little tiny numbers, especially this one here, where it says yield. Yield is your rate of return. If you have a 2% yield on something, you put, like, in your bank account, you put $100,000 in and you get a 2% yield, you get $20. Well, this one, it's costing me $579, and I'm getting 1.22%. 1.2. Not for the week, not for the month, not for the quarter, for the year. You're 1%, 1.2%. You can put your money in government bonds and get 5%. Why the hell would you put it in the stock market and get 1.2? What the hell are you thinking? Are you even looking at the... I don't care if it's popular. I don't care if everybody on your block says, hey, spiders are excellent. You can make a lot of money. Well, you can if you have billions upon billions and you can live on 1.2% per year. I can't live on 1.2% per year. I live comfortably on 1% per week. You think I can do that for the year? Hell no. All right, anyway, no, I don't do the spiders. They're absolutely horrible. In my humble opinion, of course. Now, I'm a little bit different than you. Okay, so I've been doing this for 20 years. I know what the numbers are. I know when I put my money somewhere, I want a rate of return that is better than average. Drip Drop Wireless, you seriously going to say spiders after I just said that to Lay? Hell no. No. Sorry, I got to drink ginger tea with honey and lemon for soothes my throat because I get conditions from talking too much. Mask work. He is selling an option, not buying covered calls. Means buy the stock, sell the option. Felix, thanks for that. Amy, you got it. Thanks. You're welcome. Uh-oh, trying to reconnect. I'm having issues with Facebook. Blow me a kiss. There you go. It's your birthday. All right, Jeffrey. Hope that makes you happy. All right, Drip Drop Wireless. Hell no. Bitto. Hell no. With your margin account, have you ever been at a point where you had to answer margin call? Yes, I have. About 16 or 18 years ago. Okay. Hey, Rich is here. Rich, I thought it was just your wife tonight. Damn it. Now I can't say bad stuff about you. All right. Anyway, inspire me more. Yes, I got a margin call from hell. And this is what it sounded like. I shit you not. I answered the phone call. They didn't say hi, hello, or anything else. They said, Mr. Gardino, you're done. That was it. Mr. Gardino, you're done. We're liquidating your positions to cover your losses. That was it. No hi, no hello, no confirmation whether it was me or not. Yeah, I got one of those. Okay, Braden, OKLO is pre-revenue, I'm pretty sure. Alrighty, it's still a no. Do you have any advice for 401k Roth IRA? I don't have time to day trade like most y'all. Okay, dude, I don't day trade. Oh, look at this. Dennis Mancini wants to take a look at Dell. I love Dell. I do. Okay, you're under the impression that I day trade. I don't. It may sound like I day trade, but I don't. Okay, I take a look at a certain set of stocks. That's it. All right. Now, what I'm showing you, it looks a little complicated. But what I do personally, my own time, whatever is on the calendar for the week, that's all I look at. Okay? Bank Mellon, Lennar, MasterCard, General Mills, AT&T, Verizon, General Dynamics. Those are the only ones I will look at because they have a dividend coming up. I'm just pointing at this one, just to give you an example. Okay? I look at those. It takes me 5 or 10 minutes. Let me show you one real quick. A couple of them. BK. Okay, first thing I want to do is go to here. BK, enter that. Well, first of all, it's a no because it is a monthly. I don't do monthlies. I don't know how that got there, but it's there. MasterCard. MA. Okay. High, low. Where was it? Where is it? What's the direction? Up, down, sideways, up. 507, a little out of my price range. The 507s are going for $9, which is over 1%, but it's way too close to the high. It's going to be a no from me. Okay. The next one on the list, Lennar. LEN. High, low. Where was it? Where is it? What's the direction? Up, sideways, down, up, sideways. 173. The 173 is 340. That's over 1%. Great. Now let's take a quick look at the chart. Well, here's the bottom here at 102. Here's the top here at 193. Okay, the last 60 days, up, down, up, down, up, down, up, down. Now it's down. Ooh, look at this. Here's the bottom, 1 day, 2 days, 2 days the upside. Look at the gap down. Gaps usually have a tendency to fill. This looks good. Well, let's zoom in a little bit closer. Okay, here's the last 30 days. Clearer. The closer you get to a decision, the clearer it becomes. Up, here's a 30-day high. Down, up, challenges that 30-day high. Back down, here's the 30-day bottom. Okay, now where's it going to go? It's going to go up. It's going to fill this gap and it's going to go to the upside. Great. What is it costing me? It's cost me $173.28. The closest to the strike price is the $172.50, $3.40 per share. Let's trade some of that at the $172.50. So I change this to a covered call. I take a look at the $172.50. There you go. And let's do just 100 shares so nobody freaks out about the numbers. Market order, because I like market order. Confirm and send. See, it's really not that difficult. Buy one covered call of Lennar. Expiration date would be 1 November 24. That is next Friday. I'm buying the stock at the money. As soon as the market opens up, 173. Okay, that's what I'm buying it for. I am selling somebody the right to buy it from me at 172.50, which is less than what I paid for it. So it should be easy. So my break even is 169.78. Okay. What's my maximum profit on this trade? 272 per contract. One contract, 272. 5 contracts, well, you just multiply it out. Let's get the calculator. Clear that. My maximum profit right there. 272 divided by maximum, okay, cost of trade including commissions, 16,978. 16,978. That's just for one contract. Well, it's a 1.6% trade. 1.6. So the questions you need to ask. Number 1, does it make sense? Number 2, do I like Lennar? Number 3, do I like Lennar at this price? Number 4, do I like Lennar enough to buy it and hold on to it until it hits my target, regardless if it goes up, down, sideways, or whatever? Okay, never buy something unless you plan on holding on to it for a long period of time. Doesn't make any sense. Rule number 2, never sell at a loss. But if you like Lennar at this price, well, great. Everything looked good. Let's go back to the chart. Get out of all this stuff. Get back to where I was. See, look at the chart. The chart is telling me, here's the high, down, up. Here's the high here. Coming back down, here's the bottom. It gapped down here. Okay. Now it's bouncing up. 2 days to the upside. Well, great. Okay, where's it going to go from here? Well, it's at the bottom. Okay, where do you go from the bottom? Like, you ever hear of Les Brown? He's a motivational speaker. Well, if you fall down, you better land on your back. Because if you can see up, you can get up. Kind of makes sense. Okay, 007M. What's the best stocks to day trade? You're asking the wrong person. I don't day trade. I have a strategy. Simple. I buy nothing but pre-qualified dividend stocks. Those are companies that have increased their dividends for a minimum of 20 consecutive years. Okay, and then they have to have weekly options because I want a weekly cash flow. Nice to meet you. Hello, the Moroccan Prince. Oh, I'm in your presence, sir. Pleased to meet you. Anyway, let's keep on going. 86. Yes, but only analyze dividend stocks with 20 years increased dividends and weekly options. Cool. Forced entry. If you're looking to average down on a position you're in, sell a put at the strike you want it at. Absolutely right. I like that idea. Wade Wilder. Holy shit, dude. I haven't seen you in weeks. How you been? Hope you're okay. Glad to see you back. Dennis. What ticker symbol for Lennar? L-E-N. Now, let's take a look. He wants to take a look at Dell. Didn't we already look at Dell? I think we already looked at Dell. D-E-L-L. Here we go. Delicious. Okay, Dell. Here we go. A year ago, we're down here at 70. That's the bottom. Okay, shoots on up to 180. That's over 100. That's almost a 200% increase from the bottom last year to the high of this year. Okay, she drops down, shoots back up. We're currently sitting at 123 for Dell. Okay. Look at the movement on Dell. Look. Down, up, down, up, down, up. Look at this. Here's the bottom. 2 days up. Great. Well, let's look at the last 30 days and zoom right on in there. The 25th. Here we go. Look at that. It's much clearer. Okay, down, up, down, up. Cool. What's 123 going for? 249. Freaking awesome, dude. Nice pick, Dennis. I like that one. I'm actually going to write it down. I wrote it down. All right. Ally. Let's take a look at Ally. Ally. Ally Financial. High, low, was, is. Look at the direction. Up, down, sideways. 34.71. The 35 is going to be the closest. The 35 is going for 20 cents. We can all see this all at once. Are we ready? 1, 2, 3. Hell no. 20 cents on a $35 stock? Yeah, no thanks. Sorry, dude. Ally doesn't cut it. Let's see what else we got. Forced entry. If you don't get there and they put it to you, keep the premium. Something like that. Now, I'm not quite sure forced entry what we're talking about. If it doesn't get there and they put it to you, keep the premium. I'm not quite sure what you mean. All right. Don't. All right, I agree. Gift a badge. QI. Oh my goodness. Dave Jenkins. Dave, I appreciate you coming. I appreciate your willingness to participate. QYLD, hell no. OXLC, double hell no. Sorry, they just don't fit. When I say I like consistent, predictable companies that have increased their dividends for more than 2 decades, QYLD, no. OXLC, no. Okay, both of them, the premiums are okay, but their dividends are horrible and they don't have 20 years of increased dividends. Okay, now I'm not saying that they're bad. I'm just saying I won't do them because they don't make sense for me. I like a safe, simple, predictable, consistent 1% per week. Now, QYLD, no, just doesn't work. OXLC doesn't work either. Stony Miller sent me an ice cream cone. Oh, that was cool. Thanks. Looking at starting this strategy small with IEP. Ugh. Try something other than IEP. Dennis, Macy's, hold up. KC Bruin. Okay. Let me tell you something a little bit about IEP. IEP. Okay. IEP. Go to Yahoo Finance and look at the numbers. Okay. Now, this is going to be extremely contradictory. Okay. Look at the numbers here. The dividend is $4. The yield is 26.23%. That's crazy, isn't it? Nobody pays this 26.23. Okay, why do I say it's crazy? Well, let's take a look at the dividends and see why it's crazy. Go to historical data because we want to see what he paid historically. Okay, so look, 23, 24, 24, 24, a buck. So he's paying $1. So you're buying the stock for $15.31, and he's paying $1 a share. Oh, that's freaking awesome. But that's only 1 year. Okay, I like 20 years of dividends. So let's go and say all the dividends. Okay, now it goes all the way back to 1988. Follow the numbers, if you will. 1988, 49 cents. 1989, 49 cents. No increase whatsoever. 1990, 49 cents. No increase whatsoever. 1991, 49 cents. No increase whatsoever. That's 4 years. and the dude can't produce a profit. Think about it. 4 years, no increase whatsoever. So if you're retired and you need an income consistently, okay, so let's say year 1 you're getting $1,000. Well, year 2 you're getting $1,000. Year 3 you're getting $1,000. Year 4 you're getting $1,000. What's happening in those 4 years? Inflation. So as the inflation increases, your dollar gets less and less valuable. But this dude here is not increasing his profits to its shareholders. So every year you're trying to get something that keeps increasing in value, yet you're not getting higher and higher. It gets worse. Hold on, but wait, it gets worse. 1992, he just cut your dividends in half. Okay? 1993, what the fuck? He cut it in half again. 1990, well, nothing in 94, nothing in 95, nothing in 96, nothing in 97, 98, 99, 2000, 2001, 2002, 2003, 2004. Nothing in 12 years. So he goes from 48 cents, 3 years, no increasing. Then year 4, he cuts it in half. Year 5, he cuts it in half again. Okay? Then he goes 12 years with no dividends at all. Okay? And then he picks up again in 2005, cuts the dividend again. So now you're at 2005 at 10 cents. 2006, 10 cents, no increasing. 2007, now you're up to 15. 2008, you're at 24. 2009, 24. 2010, 24. 3 years, no increases. Come on. Okay? 2011, 10 cents. He cuts it by 60% this time. All right? So, year 2011, 10 cents. 2012, 10 cents. 2013, now you're at $1. 2014, now you're at $1.50. Okay, 2015, $1.50, no increase. In 2016, $1.50, no increase. 2017, $1.50, no increase. 3 years again, no increases. Seriously, come on. So now we're at 2018, $1.75. 2019, $2. 2020, $2, no increasing. 2021, $2, no increasing. 2022, $2, no increasing. 2023, $2, no increasing. 2024, $1, decrease it by 50%. Explain to me in manners in which I'll understand why anybody thinks that's a good place to put their money. Anyway, I'm going to say no to IEP. Ruben, Altria or GILD? Well, Altria is MO. Okay, we already looked at MO. It was a no only because, look, 49.71, 49.70s, the 49.50s, 88. The numbers, I don't know. Did we already look at this one? Last 30 days? No, I don't think we did. Okay. Down, up, down, up, down, up. She should be going to the upside. 49.70, the 50s are going for 62 cents. Okay, that's over 1%. It's Altria. Altria has been in business for over 100 years, and they are a dividend king, which means they've increased. That's funny because we looked at one who didn't increase, but this one here, okay, Altria, MO. MO. I'm not going to go all the way back. I'm just going to go back to the 90s. 20, 22, 23, 28, 33, 40, 44, 48, 53, 58, 64, 68, 73, 80, 86, 70. Is that right? 86, 75, 32, 34, 38, 44, 40. Well, oh, that was back in 08 where they dropped. Okay, yeah, they made an adjustment in 08 because of whatever the fuck that was. Look at that dividend they paid out in March 31st, 08, $51 per share. That's a nice dividend. All right, anyway, so 29, 32, 34, 38, 41, 44, 48, 52, 57, 61, 66, 70, 80, 84, 86, 90, 94, 98, 102. Consistently going up for more than 5 decades. Anyway, that's Altria. All right, there we go. All right, MO or GILD. All right, Ruben, this is MO, Altria, okay? 30 days ago, here's a 30-day high. Your 30-day bottom was last Friday, 3 days to the upside, and it's still going up, 49.70. You're getting well over 1%. Cool beans. So now I've never heard of GILD. GILD. Gilead. Okay. Well, Gilead's a big fat no. Look at it. It's at the high of the year. I never ever buy it. I never buy at the high of the year, because what are you waiting for? Are you waiting for someone to come in and give you a taller ladder? Because right now you're standing on a ladder reaching for the sky. Now you're waiting for someone to bring you a taller ladder so you can get higher. Okay, I don't buy at the high. Okay, the high comes down, that's where I buy. It goes up, comes down, that's where I buy. It goes up, it comes down, that's where I buy. It goes up. I like 1%. I really honestly don't care how far it goes up. If I'm buying here at a low where it turns around, okay, I'll get out before the run. I don't care about the run. And it sounds kind of silly, because as it's running up, okay, 1 week, 2 weeks, 3 weeks, 4 weeks. Yeah, I don't want to wait 4 weeks before I get my money. Okay? I like consistent weekly cash flow. I don't care that the stock goes up. It's nice. It's good for someone, not for me. I want consistent weekly cash flow. Why isn't my phone charging? It's not plugged in. Oh, well. All right, so if I was going to pick between Altria or Gilead, I'd go with Altria. That's just me. That's not advice. That's just my opinion. 86, you can start to test it out with paper trading. Actually, I'm going to agree with 86 on this one. I actually insist everybody to paper trade. Now, I've been trading for 20 years, and I still paper trade. This account here, this is a paper trading account. Okay, but this one's not. This one's not. But this one is. This is one I do my teaching on. Okay. Lilly is the best. Okay. He makes 1% per week from premiums on covered calls, not yield. Thank you. Teach me how to avoid paying taxes. Ruby Doobie. Okay, yeah. I don't teach taxes. Really, I don't. Your best bet is to come up and find a good tax strategist or a good tax planner. Okay, get ready to pay a big fat chunk, because that's what they do. They teach you how to not pay taxes legally, right? Teaches how to show. Okay, wait. Ruby Doobie, yeah. That's the real trick. Okay, Ruby Doobie, here's a little bit of advice. You ready? Okay. If you have your trading account, ooh, check that out. Ow, it's gone. Damn it, that was cool. All right, anyway, if you have your trading account in your personal name, you are going to pay the highest taxes there is. Okay? If you have your trading account in a trust, no taxes. If you have your trading account in a corporation, there it is again. Yay, Arvin. Thanks, cool. Okay, if your trading account is in a corporation, mainly in a corporation in a pension fund, well, that's not taxed either until you take it out. Okay, so if your trading account is in a corporation, you get taxed at the corporate level. However, the profits you make at a corporate level can be offset by legitimate business purchases. Okay, so if the corporation, I always tell this to people and they say that can't be true. Okay, if your board of directors in your corporation insist that the quarterly meetings are on a private yacht floating around in the Caribbean, and the corporation has to pay for it, that is a tax write-off. Okay, but corporations are entitled to have tax write-offs. Why do you think Warren Buffett's secretary pays more taxes than Warren Buffett? Why do you think Donald Trump pays less taxes than his employees? Okay? Lay, I appreciate you like the information. Thank you there, Stephen Kent. But my advice or my opinion when it comes to taxes is seek the advice of a tax strategist or a tax planner, not a bookkeeper, not an accountant, okay? Not your brother's, uncle's, best friend's, sister's cousin. Nope. A tax planner or a tax strategist. AT&T keep cutting the dividends. Yep. Example we can buy coming up as good practice. Mindy, how are you? Mindy, you want an example that we can use? Okay, MO. Altria. Altria is a dividend king. They have been in business for over 100 years. They have increased their dividends for more than 5 decades. All righty. So Altria a year ago was at 42. The bottom of the year was at 39. She went sideways for a couple of months, shoots up, finds the high at 55, drops back down to 48.50, settles up at 49.71, where we are currently today. All righty. So if we isolate the last 30 days to get us a good idea, where do we think it's going to go over the next week or so? Well, let's take a look at the last 30 days. 30 days ago, we were at 51.42, somewhere in that area. She drops down, goes sideways, drops down. Here's your bottom right here, 48.85. Okay, 1, 2, 3, 4 days to the upside. So it's actually bouncing off this bottom here, going up. Now, here's a question you need to ask yourself. Number one, do you know what Altria does? If you don't understand the company, if you don't want to buy and hold it for a long period of time, don't buy it. If you don't understand the company, don't buy it. Okay, Altria, they have been in business for over 100 years. Okay, so at the moment, 49.71, the closest one is going to be the $50 call strike. If I buy it at 49.70, that's the current price right now. Granted, remember, important, these numbers are all going to change first thing Monday morning, but the mathematical equation doesn't change. This is where the purchase price is going to be. This is where the strike prices are. This is what you're going to receive when you sell a strike price. So if I buy it at 49.70, sell it at 50, I'm collecting 62 cents a share. So let's see what that looks like. Let's get rid of that. Let's change this to covered stock. Let's take a look at the 50. The 50 is right there. Let's just do one contract so people don't panic. I like to buy it at the market open. So as soon as the market opens, first thing Monday morning at 9:31, I will be the proud owner of 100 shares of Altria. Instantaneously after I buy it, I'm going to sell a covered call for someone to buy it from me for almost the exact same price I paid for it. Almost the exact same price, because I'm paying $49.70. I'm selling it at $50. I'm going to collect 30 cents profit. But the premium I'm collecting, well, it's $93 per contract. One contract, $93. What is that costing me? Okay, so if my profit is $93.50, $93.50, and I divide it by the cost of the trade, including the commissions, $4,907. $4,907. It comes to a grand total of 1.9% for 1 week. 1.9%. So for the fun of it, somebody asked me this a couple of days ago, well, what if I just want to sell it for 2 or 3 weeks out? Less work. Cool. Well, let's look at it. Okay, so I'm going to change this right here where it says November 1st. I'm going to change it to November 8th. Okay, now I hit confirm and send. Says the same thing. Buy one covered call of Altria The weeklies, November 8th. See? 8 November 24. That's not this Friday coming. That's next Friday. So that's 2 Fridays out. The $50 call strike against Altria. Well, now I'm getting $114. Okay. So I'm not sure I would do that one. Because if I'm getting $93 for 1 week, wouldn't you think I'd get $180 for 2 weeks? But no, I'm only getting $114. Why the hell would I do that? That's why I like doing weeklies, not bi-weeklies. All right, so anyway, let's divide it out. Clear that. $114.50 divided by the same price, $4,886. And that comes to a grand total of 2.3. So I'm not even gaining 0.5% for that second week? Oh, hell no. Okay, so if I go 2 weeks out to the 8th, that's 2 weeks, because November 1st is 1 week. November 8th is 2 weeks. All right, so it's only 2.3%. Still over 1% per week. Okay, fine. Dennis Mancini wants to take a look at Macy's. So let's take a look at Macy's. Let's get rid of all this stuff. Get out of that. Get out of this. Go back to this and pull up Macy's. Now, I actually own some Macy's. Macy's was my most favorite stock this year. All right, Macy's. High, low. Where was it? Where is it? What's the direction? Up, sideways, down, sideways, 1543. The closest one is going to be the 1550. That's 27 cents. Okay. Well, let's take a gander at it. The low of the year was the low of the year was a year ago, $10.62. The high of the year was in the middle of March, and that was $22.18. That was probably right around when they were having those negotiations of a buyout. Somebody wanted to buy it and bring it private. Okay. That being said, the last 30 days, it's getting that time of night where my eyes aren't focusing very well. All right, 30 days ago was the 30-day bottom. Look, 1480. She shoots up to the high, 1660. So what usually happens at a high like that? From 1480 to 1660. That's $1, $2, almost $3. Well, $3 on a $14 stock is over 20%. That's a 20% increase from the bottom here to the top here. That's a 20% increase. And if you think there isn't going to be any profit taking, you're sadly mistaken. Okay, profit taking. Boom, brought it down here. Bottom, 1 day up, 2 days up. Great. The 1443 by the 5, sell the 1550s, 27 cents. That's over 1%. Okay, I like over 1%. We got 24 more questions. Let's keep on rolling. Ooh, Jill Ann Bruner, Estee Lauder. I've got way too much money tied up in Estee Lauder, and I've had it for a freaking long time. All right, I'm still down 10% on my Estee Lauder. All right, let's take a look at Estee Lauder. Why not? EL. First thing I want to see, high, low. Where was it? Where is it? What's the direction? Up, sideways, down, sideways, 87.25, 87.26. The 88s are going for 360. That's almost 4%. Holy shnikey. Alrighty, well, let's take a gander. A year ago, we were at 134.49. We actually have a double top. Check out the double top. Once in January and once in February, 159.93. All right, the last 30 days. Take a look at this. Here's your bottom here. Okay, 82. This was back in the beginning of September. She goes up, pulls back. One gap up, two gap up. Well, you know those are going to fill. And they did. Look. See? This one filled right here. This one filled right here. Okay? See, it filled just the other day. Now it's going back up. Or is it? See, here's the bottom. 1 day up, 2 days up. This is a pullback. Okay? That's what you call a false bottom. You think it's a bottom, or is it? Well, if Monday's up day, then it is the bottom. All right, so let's take it the last 30 days. Okay, here's the last 30 days. Up, here's your 30-day top, here's your 30-day bottom, 2 days the upside. What's going on here? That's an anomaly. We'll have to see what happens on Monday. Okay, but if you like it, what does it normally do this time of year? This time of year, Estee Lauder, oh, look at that. You can't mistake that for anything. Okay, that's nice. Maybe I'll keep my Estee Lauder. Who knows? All right. You're very organized and knowledgeable. Thank you there, David. Dave, I'm sorry I picked on you about those stock picks that you had. Those were just horrible, in my humble opinion. Uh-oh. I missed some questions. All right, there we go, Estee Lauder. Thank you, Dave. I appreciate that. Joe Anna Owen. Very good. I'm glad you like it. Sweetie Swag. Why do you sell it for less than you paid for it? Well, here's the thing. Number one, I don't know which one you're talking about, but I have an idea. All right. If I'm buying it for $87.26, okay, that's the purchase price, $87.26, and I sell it for $87, you're right, I'm losing 26 cents. But am I really losing 26 cents? Because if I sell it at 87, I'm getting $4.10. So let's break out the calculator. So my profit at 87 is $4.10. $4.10. But if I'm buying it at 87.26 and I sell it at 87, I'm losing that 26 cents. Okay, well, let's take that 26 cents out of the profit of 410. Okay, subtract 0.26. So I'm actually walking away with $3.84. Okay? If you understand that, I can't interact with you right here, but it would be nice if you did understand that. So I'm taking it out of the profit. So it enables me to buy it at 87.26, sell it at 87. It's easier to sell it at 87 than it is to sell it at 88. Okay, so I could sell it at 84, but I'll be taking in 570. But at 84, I'm losing $3.26. So you take $3.26 off of this, what am I walking away with? So whatever profit you're walking away with, you divide it by the purchase price. Not 87.26, because we already subtracted the 26. It would be just 87. Does that make sense? So if we divide it by the 87, okay, I'm still walking away with 4.4% on Estee Lauder. If you like Estee Lauder. Now, I like Estee Lauder. I have some Estee Lauder. I have more Estee Lauder than I should have. All right. But yeah, anytime you buy it right here, that price is always fixed. But when you're selling the rights to someone else, I can sell it at 84. I can sell it at 89. I can sell it at 91. As a matter of fact, I can sell it at 94 and still make $1.55. Holy shit. I can go, what is that? 1, 2, 3, 4, 5, 6, 7. 7 strikes out of the money and I can still make over 1%. It all depends on what you want to do. The safest bet is in the money. Lower rate of return, well, 4% is nice, but the further out of the money, you get a higher rate of return, but the stock has to move up. Okay, so what if the stock just stays exactly where it is? Look at where it is on the chart. Okay. Here's where it is on the chart. Is it guaranteed to go up? Nope. Is it guaranteed to go down? Nope. Is it guaranteed to go sideways? No. There's no guarantee anywhere of where the stock is going to move. What I look at is I look at what has it done lately. Remember that song, What Have You Done For Me Lately? Okay, anyway, so the 30-day high is here, and the 30-day bottom was 4 days ago. Okay, so at a 30-day high, you're going to have profit taking because it's just human nature. Okay, if I buy something for $80 and now it's 104, well, yeah, I'm going to take the profits. Okay, so from once I take the profits, it starts to drop, and it drops to a point where you got people like me and say, wait a second, hold on, Estee Lauder 87, hell yeah, I'm going to buy some. So you go by human nature. When it's done profit taking, well, people start to buy, and then it goes back up again. Because no matter what you do, you take a look at any stock, okay? Down, up, 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 down, up. That's all they do. Now, granted, you can do it quickly, up, down, but it's the same thing, up, down, up, down, up, down, up. That's stair stepping down. Okay, but they go up, they go down. The idea is to make sure the odds and probabilities are in your favor. Okay, we got some more questions before the time is up. Zing! How are you today? When he receives the premium more that offsets the difference that he makes at 1%. Thanks, 86. Can always count on you coming up with good answers, dude. One of these days, I'm just not going to show up and let you do it. Anyway, Lennar, what is their corp business? Don't want to leave stream. Okay, Maximus, Lennar is a home builder. They build new homes. And just by you saying that, don't buy it, dude. If you do not know what the company does, don't buy it. Maximus, you want to take a look at Core, C-O-R-E? I'm going to tell you right now, I've never heard of them. I've never heard of them. Well, they have no options. That's a no right from the start. No options, no. No dividends, no. Okay, so let's go for the rest of the questions. It's 11:28. Dave Jenkins, thank you. I think I'm picking up your system. Maybe I'll try to purchase one share for a test. Okay. No, nothing about options. Okay. I think I'm trying to purchase WBA Walgreens. Okay. Joanna Owen, very good. Teach me some. Okay. 86, blah, 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 blah. All these questions. I think I'm just about done with the questions. Jilly Berry, Roth IRA. Okay, you like a Roth IRA? No problem. WHT stock. We were looking at Estee Lauder. Trixie 96. Hi, what do you think of Cheesecake Factory stock? Haven't been around long enough. Sorry. Okay. Now, I like companies have 20 years of increased dividends. That means they got to be in business for at least 20 years. And they got to increase their profits consistently every single year. I don't think Cheesecake Factory fits. I've never traded them. I mean, I looked at them last year or the year before, and I was like, hell no, they got a long way to go. All right. Is that Samlac 01 or Samiak? I don't know. Riley. I actually have Riley, and I have MBLY. Riley, R-I-L-Y. Cool beans, last 30 days. Okay. Now, Riley, 30 days ago, at $5.40, drops down to $4, shoots up to $6.60. Now, from $4 to $6.60, okay, that's a 50% increase. Where do you think this thing's going to go for the next couple of days? Yeah, down. A 50% increase from here to there, that's a week and a half. A week and a half, 50% increase. Oh, hell yeah, there's going to be profit taking. Okay, it's going to come down a little bit further, in my humble opinion. I could be wrong. I've been wrong once or twice. So at the $6 mark, right at the moment, the $6 mark is going for 20 cents a share. That is over 3%. So if you bought it first thing Monday morning at $6, sold somebody the right to buy it from you for the exact same amount of money, you make 3%. So 3% every single week for a year, that's 150% per year if you make 3% every week. And trade with your IRA account and don't pay taxes on your profits. Okay, Jilly Berry. That sounds good in theory, all right? And you're right. It's after-tax money put in there, and all that money grows tax-free. What happens when you take it out? You're taxed on it, okay? So here's an idea. What if you took all your money, put it into a life insurance policy, borrowed the money out of the life insurance policy? That's tax-free. The money grows inside the life insurance policy, tax-free. So as the money is growing in the life insurance policy, tax-free, you can borrow money from it, and borrowed money is tax-free. Now, if you do this in a corporation, and the corporation owns the life insurance policy, well, the corporation is getting money tax-free, and the corporation borrows it. There's a lot of ways you can set it up. Seriously, you can. Okay, that's why you should always talk to a tax strategist or tax planner. Okay, and it all depends on how much money you have. And if you got hundreds of thousands and millions, yeah, pay for a good tax strategist. If you get under 100,000, yeah, it might not be a good idea to pay for tax strategists because they are a little on the pricey side. So yeah, Jilly Berry, when your Roth IRA is done and you're ready to take your recommended daily allocations or whatever that is, you're going to be taxed on that. You're not taxed on our Roth IRA money because it's after-tax money. I have a Roth I use to trade. Yeah, I get that. But when you take the money out of that, okay, so let's say hypothetically it grows. Okay, you take 100,000, it grows to 500,000. Great, no taxes on that. Now you take money out and you buy something, you're going to be taxed. Anyway. All right, that being said, it's 11:33. I'm going to turn into a pumpkin. We only get 71. Come on, guys. We're up over 200 already. Now we're down to 71. I'm done. You guys have a great day. Elf took market share from Estee Lauder. No, damn freaking elves. Dennis Mancini. Hey, dude, we'll catch you again tomorrow night. We'll be at same bat time, same bat channel. This is the only one I have to actually turn off because all the other ones, they turn off by themselves. But that one, some strange reason. Okay, this one here. You guys have a great night. We'll see you again tomorrow. And now, and over here on YouTube, you guys were great. Have a nice night. We'll see you again tomorrow. And down here, y'all have a lovely evening, and we will catch you tomorrow.